Hello and welcome to Trading Growth and Value Stocks. My name is James Boyd. We welcome you on this October 29th. Yes, behind me is frost on my grass. Show you a little picture here and a little video here. Just a moment, Barbara Armstrong strikes back as we talked about fleas last time. So we'd like to welcome all of you here today. We got Lena, Will. We also have with us Paul, JP, David, Ocean Life. We also have Keeps Moving Too Fast, Janelle. Hello, Janelle, Thea, and many others. Let's go ahead and get started. Now, I just want to start off by this. This has been one of the most incredible, probably week and a half I've seen in years, okay? And the quick heads up, this is a live video. We meet on a weekly basis. Feel free to come back, actually, and also subscribe, and also actually let other people know about it as well. And I'll show you a playlist where you could actually find us and also subscribe as well. Now, just real quick, as we get going here, remember that you could also follow me on X. I do post educational content and examples. They are not recommendations, but I also post those there frequently throughout the day. Also, just real quick, you could also follow all of us coaches there as well, and we also post announcements as well. Now, as we get started, remember the information here is provided for general informational purposes only, not considered individualized recommendations or endorsement of any particular security, chart pattern, or investment strategy. Some of the things we talk about might interest you, and others you would say, I'm not going to consider that. That's fine. You get to pick. Now, also remember that Schwab does not recommend the use of technical analysis as a sole means of research. Might be a big part of it, but you might look at maybe fundamentals, macros, intermarket analysis, things like that. Intermarket analysis, things like correlation between asset classes. And you actually try to use that as your investing research to make an investing decision. Now, that's kind of exciting when you start to use all those different disciplines together. Now, also remember our examples we're going to use in the paper money software application. Also remember that investing involves risk. If we talk about dividend paying stocks, remember those dividend paying stocks, they may reduce or stop paying dividends. What it does not say is they could also increase the dividend as well. So just know that it's not infinite. That dividend policy could be changed. And also remember that investing in stocks involves risk, including loss of principal. And our examples here today that we'll talk about, we're going to spend a little bit more time talking about growth. Now, Kevin and I teach on Friday morning, and every week we talk about three tickers that actually are A, looking at growth, 2, looking at value, 3, looking at income. And growth has just continued to push here to the upside. So when we say growth, we're talking about areas like technology, discretionaries, communications, and so on. On the lagging part of that might be industrials and financials. But those 5, especially the top 3, tech, discretionaries, and communications, if we're talking about growth, it's usually going to come through those 3 areas. We'll talk about the markets, the sectors here, and we're going to look at some new examples and past examples. Now, as this class is called, it's trading growth and value. It's not buy and mold, okay? Now, just real quick, as I made mention, you could go right to youtube.com. You're going to see that this page, let me send this out to you. This page will actually get you right to our YouTube page. So if you said, well, how do I join us? I think there was a gentleman before that actually said he's joining us on his phone. Well, how does he do that? On his phone, he actually download the app, YouTube. He went to Trader Talk Schwab Coaching Webcast. You can subscribe right in the middle of the page. And that way you could actually be able to watch it just on your phone, okay? Now, I like a phone. I like an iPad as well. Feel free to join us there on mobile, okay? Now, as far as the playlist for this class, okay? So I want to kind of give you a little sense of what have we discussed. And this is showing the playlist. Feel free to bookmark this. Think of this like your favorite TV show, and you actually said, hey, I want to watch, the season and episodes of that. Well, so this is by chronological order. You're going to see that last week we talked about precious metal sell-off shifting to where? Now, that's a question for you, okay? Where did the precious metal sell-off? Where did investors sell off precious metals? Where did they go to buy? What did they buy? We know they didn't just sit there and cash. They bought something. What did they buy? What areas? We talked about as the pullback over. Where's their relative strength? Cash flow, trends, and momentum. Cup and handles. Mamma mia. Bounces, breakouts. So those are our last 4 weeks. I want to kind of give you a little flavor of what we've talked about the last 4 weeks. Now, today, I'm going to kind of talk about some stocks. I think one of the issues that we're dealing with is some of the stocks, they almost look like they've gone up too high. I mean, can you believe we're complaining about this? James, I have stocks that have gone up too high. I want to whine and complain and eat cheese, okay? But I want to kind of talk about selectively picking ones that don't have earnings coming up like today or tomorrow, and looking maybe for some stocks kind of at some key levels to try to pick those stocks up after some of these pushes off support, okay? Now, let's just quickly take a quick peek at, and I'm going to start with just real quick the SPX, fast. When you look at the SPX, brand new high for the SPX, okay? Another new high. I'm sorry to be the bearer of bad news, SPX. Now, if you look at, let's say, the NDX, now, by the way, we're not that far away from 7,000. The NDX, brand new high again. And if you look at the Dow Jones, now, I want to kind of tell you this. I remember when the Dow Jones, probably back in, like, say, 2008, was at 5,700. 2008. And, you know, if you could look back, right, probably would have said, oh my gosh. You know, so the moral of the story why I'm bringing that up is when you get those pullbacks, like we're seeing maybe perhaps in gold and silver, pullbacks are potential opportunities, okay? The closer it gets to the zero, the more exciting it potentially could get, okay? Especially on an index. Now, if we talk about the Dow Jones, another 271. Now, we got to ask ourselves, what is causing the Dow Jones to get a little push? Does anybody know? Anybody know? Dow Jones, any 30 stocks, which ones are moving? What do you see? Now, so we talked about the three, the S&P, NASDAQ, and the Dow, all pushing new highs. Russell small caps, we have not seen the breakout there. I've kind of let you know that, you know, if we kind of said, do small caps rank up with the SPX and NDX and the NASDAQ, NDX and the Dow Jones? I mean, in our examples, we probably would say no, because we're looking for bigger stocks in terms of volume, balance sheets, income statements, institutional ownership, profitability, and so on. So this is kind of more really a more risky trading vehicle because they're more unproven companies, okay? RUT has yet to break out. Now, if you like to trade the RUT, you're going to see that that is still forming an ascending triangle, which is a continuation pattern, okay? So it just hasn't broken, the keyword is, it hasn't broken out, keyword is yet. Now, the one, if we're talking about, we're going to include for the index, remember we talked about the question, where is the precious metal sell-off leading to? Where are investors buying? Well, if we brought up the sectors for just a moment, and if we try to load these, whenever I teach, I'm taking bandwidth off my computer, and it's a little slower to load as normal. But if we looked at this and said, for the week, which sector, you know, if we looked statistically, where has the push gone to? Well, if you take a look at, here's gold, right? Down 0.7%, okay? And you're now going to see, if we looked up at the very top, where did it go to? Well, that push, if we're talking about where did the movement go to, it went to the semi-conductors, the stocks. We put the semi-conductors in there. It's technically an industry group, but it really kind of trades like a sector. Now, obviously, right behind that, it was tech. And you're going to see that really outside that, there wasn't much that came close. It was really like the money. If you looked at, well, what about discretionaries? 0.4%. It was semiconductors, and which is also underneath the umbrella of tech. So if you said, where'd the money go to? You can't say there were four different options. It was semiconductors / technology. Now, as this loads, is there anything else that was like close to that? Nope. The second one that was actually close was in energy at 1.6%. But that's it. So why do I say that? Well, it should have been pretty easy to see that because there was pretty much what was top performing and everything else down below. Now, the other thing that would kind of tell us it was pretty easy to see that was, remember, we put the SPX on the sector list, and here's the benchmark, right? We're looking at the SPX. When you look at what sectors, and this is kind of a major point, what sectors are actually kind of in line or performing above the S&P 500? It was only SOX and actually IXT. Now, a lot of people would take this as a negative. They'll say, well, there's only one sector. There's only, if you include the stocks, there's only two. Well, that's why people buy the index. Now, when I say buy the index, we're talking about the product that tracks the index. That's what I mean by that. So that's why some people do that. Now, remember, an investor could actually just try to buy the industry group of semiconductors. They could try to buy the sector itself and or the stocks. If someone says, hey, the S&P is actually one of the top performing sectors right now, if you include that for sectors, the investor might just try to go out and buy a product that tracks the S&P 500. Now, these other ones, the reason why the relative strength column headings, they're actually red, they're underperforming the index, the S&P 500, in the different durations of time. 5 days will be 1 week, 10 days would be 2 weeks, 21 would be 1 month of trading, 42, 2 months, 63, 3 months. So the major takeaway is that the indexes are trading like stocks. How many of you have recognized that? Okay. Now, when we pull up these indexes, and I'll just pull this up, the SPX, if you look at some of the movements we've been seeing, and this is just in the last couple days, okay, less than 2 weeks, you got the index up 4.7% just in the last 9 trading days. Just in the last 9 trading days, okay? Now, the comment actually from Sherry is that layout available as a script? Well, so let me do this. I could try to share with you. I'm not counting on it, okay? But I could just say share workspace. Now, if this works, wonderful, okay? If you said, hey, I wasn't able to get that to load as a workspace. See, it doesn't matter, workspace, any type of script, go to setup, open shared item, and now what you're gonna see is I'm gonna copy and paste back what I sent. The workspace, if it works for you, is actually putting all these labels in one shot. That's what it's doing. It's not having the investor pick out the scripts, manually enter them one by one, and then making it look like this. So when you share the workspace, it's trying to get all of them to load in one shot. Might need some changing a little bit. Now, the other thing you could actually do is you can go right to my X page. Any of those column headings we actually see up at the top, you'll also notice those right on my X page. I'll share that in just a moment. Now, the one thing is when we kind of talk about, just real quick, a couple stocks, I do want to kind of make mention of a couple stocks that are kind of doing some interesting moves. Now, we said the Dow, okay? Now, when we actually take a look at, just real quick, the Dow, one of the stocks, and you know it's coming, Dow stocks, you know where I'm going, right? Meow. Doink. Anyone see that today? Anyway, you probably saw that and was like, oh man, it's coming. I know it's coming. Now this, you actually have to be a little surprised by this, okay? Because based upon how many people talk, everyone says how bad it is, how bad it is, how bad it is, how bad it is. And maybe I walk around with rosy colored glasses. Maybe I do, okay? But the big thing is when you take a look at Caterpillar, if everything was so bad, now I'm not saying there's some things that are not bad, I'm saying everything was so bad on a majority basis, how come Caterpillar is going up to a brand new high? I mean, what are they doing? Are they selling plastic dump trucks or are these real dump trucks? What are they doing? Now, what you're going to notice is right here, they actually beat the expectation, okay? The estimate was 452. The actual was 495. So beat it by a good 8%. Many investors like that, where they smash the expectation. And what you're going to now really notice is it gaps up and runs. You cannot say, oh yeah, it just popped up and faded. No, it opened up around 560 and then squirted another 36 points. This is why people pay attention in the morning, okay? Now, the big thing is when we also go back to what are some other stocks that are kind of standing out? You couldn't say the Dow without saying the NVIDIA. In about a 2-day period, NVIDIA yesterday morning was at 193. Today topped out at 212. Last night at 11:45, it had a 2-cent bid-ask spread. Just because you're in bed doesn't mean other people are in bed. I'm talking about foreign investors. Posted that on X yesterday. The biggest actually thing is NVIDIA yesterday traded 300 million shares. Now, it wasn't quite. It was like 292 or something like that. Fast forward, roll to the upside. 300 million, which is like NVIDIA by itself is trading like an index by itself. And it hit the 5 trillion valuation. Pretty amazing. Apple, you're going to also see when you take a look at this, has earnings coming up tomorrow. We talked about yesterday looking for companies that, for example, maybe have done layoffs to try to preserve earnings per share, potential dividends, and so on. You're going to see that Amazon has not had a bad push. We'll come back to some of these in just a second. Just want to show a couple. IBM, we might think, well, there's no way it can go higher. Well, after a big push, it ain't falling down. Okay? Now, how come it's not falling down? How come more sellers aren't selling? Well, if they are selling, buyers are stepping in and holding the price up near that 310. Many technicians probably not going to fall asleep on IBM. Now, I'm going to come to these in just a second, a little bit deeper. I want to just show a couple. Cisco. Now, the reason why I pull up Cisco, it's in the paper money count, and Cisco has had a nice push, and it's actually a little bit more of kind of, I'm going to call it a crawler or a creeper. It doesn't pop, at least so far, like NVIDIA, but just kind of grinding to the upside. The paper money account, let's pull that up, has a couple shares on it, and you're going to notice that if we look at Cisco, about 200 shares or so, couple bucks on that, and just kind of grinding to the upside. Now, the last one I want to kind of bring up two more. Amazon, I already mentioned that. Actually, let me go one more. Microsoft. Now, when you look at Microsoft, we talked about that yesterday, how it popped to the upside. We showed a chart yesterday, and the chart was as follows. It was using the moving average envelopes. Now, this is kind of pretty important right here because a lot of stocks, they have had some big pushes to the upside. And remember when we said that, hey, the farther that you get above the blue line, the greater the chance it has to maybe revert back down. Now, on Microsoft, now I'm going to share this chart. If you say, hey, can you share this chart? Let me just do it right now. I'm going to hit that before someone asks me. I want to kind of, the first trade example I want to do here is on Microsoft. Now, you might say, well, James, Microsoft went up to the prior high at 555 and it faded again. Well, who cares? Okay. The fact is, when you get higher and higher off that level, it's enticing people to sell. Okay. Because they know statistically there's a high chance that it could come back. Do they sell all of their shares? They might try to. Could they sell some of them? Sure. Okay. They might profit take on some. Now, if the investor said, look, James, I'm trying to buy, remember, the blue line is the 10-period moving average. That is the foundational concept to any trade example that we do, any of them. We're looking for the price, P, okay, greater than the 10. Now, James, you might say, well, are you talking about the 10-day exponential? Are you talking about the 10-day haul? And the answer is yes, all the above. It could be above the 10-day exponential or the 10-day haul. Yes. Now, we might think that, oh no, red candles are bad. Well, not necessarily, especially if they're kind of coming down and they're still staying above the 10-period moving average. Now, many investors, if they're trying to set up a buy, they're trying to kind of buy above that 10 and maybe no higher than that yellow line. Now, what's the yellow line again? The yellow line is 3% above the 10-period moving average, 5% above the 10-day moving average for the red line, and 7%, okay, above the 10 line is the white line. So it's 7% above the 10-period moving average. Now, normally in our examples, what we're going to do is, now some people like to do this. They like to use buy limit orders. Buy limit orders is saying, where would you, now here's the deal. Let's stop talking stocks for just a second. You bought a car, you bought a house, whatever. You bought something off the internet, whatever, and you told the person, hey, I know you're asking $100, I'll give you 95. You did a buy limit order. Okay, now let's come back to stocks. We're saying on this chart, where would the paper money account try to buy the shares? Where would you like to buy it? Says the investor. Well, the investor says, look, I'm trying to buy right at support. Now, is it likely to come down right to that? Who knows? Okay. They might try to say, look, if it comes down maybe even close to that, they might say, look, I'm going to try to maybe buy where this kind of broke out from, thinking that it might actually try to get a little bounce. That area is right about 536. I'm going to right click right near there, right click, buy custom with OCO bracket. Now, if we did a buy limit order, it's saying buy it if we get to that price or less. This is not an alert. This is not an alert. An alert is not an order to get in. A buy limit order is an order to get in. And it's allowing it to buy up to 532.08 or, say the word, lower. Okay? Now, what I'm going to do in this case, for time's sake, I'm going to go in here and say, well, how many shares could we really buy? If we said, how many shares could we buy? I'm going to say probably about 15 would be the top end threshold of really what we could buy, which would be about $7,500 of stocks, or as far as capital. And I'm going to come back down to, let's say, day to GTC on the target and the stop. Now, if we were going to use the 10-period moving average as support, let's say we did that, 527, okay, 15, 527.15, less 2%, it's going to give us 516.60, okay? So if I come down here and say 516.60, that is just 2% below the 10-period moving average. Now, what I'm going to do for just for the time's sake, I'm going to come back to 555. Now, 555 was really just this prior high, okay? Now, so what's the trading philosophy? The trading philosophy is as these stocks elevate off their 10-period moving average, sometimes we're trying to sell into the strength, especially when we hit the red line, but especially when we hit the white line, okay? Now, trying to profit take or do something to offset to try to protect the position, the unrealized gains. Now, what I'm going to do is I'm going to put a target right here. Now, this would be foolish not to look at a weekly chart, because when you go back to the weekly chart, if we were to do this and said, where might this try to go on a weekly chart? Well, if I pull this back up on a weekly chart and say, where might it try to go to 3-year weekly? This chart, okay, is really, if we're talking about now, this seems so natural to say this, what do you see on the chart? Now, this chart is a trend candlestick chart. And what you're now going to notice is the last time we really had a pullback, we fell down to 350. Now, remember, people were crying in their suit, oh no, it's going down to 350. But now when you actually look back on it, you're like, man, where was I? Well, a lot of people don't pay attention. That's the number one thing I actually see, okay? People struggle to pay attention, to focus, to concentrate. It's hard to have any success in anything. You can't focus and concentrate. Because you can't focus and concentrate, you can't be disciplined, okay? Now, here's the deal. If we look at where this fell down to where it went up to, we didn't even pull back to the first Fibonacci level. Now, here's the deal. Here's what many of us have learned, okay? You could do 10 trades. 9 of them, some go up, some go down. But out of 10, that investor really needs one of them that really does the brunt of the labor or the work to the upside. If 1 out of 10 could be a home run grand slam, the other 9 can pretty much offset each other. Some up a little bit, some down. They wash out. If we could get 1 out of 10 to get a push, you might be okay. Okay, now we'll see over time. But 1 out of 10, that's what many investors have actually kind of seen. Can 1 out of 10 get a push, and the other ones, 9 out of 10, completely offset each other? Some small gains, some little gains, wash. The whole thing really comes down to, can one of them? Now, if you have 2 or 3 that really do it, and the other ones wash, it can be pretty interesting. Could be. Now, what I'm going to do is, the reason why I kind of pull this up is when you look at this, this has been a pretty strong flag in terms of intermediate. Okay, we're talking about weeks to months. Now, the reason why we're kind of focused is we're trying to look for stocks that maybe have a weekly trend to them, which it does, and then a daily chart, and then it does. We're just trying to actually get in on the little bounce. In the shorter term, that trend candle is still green. Why? Well, because it's still above the moving average. We're post the earnings. Microsoft, the estimate, the earnings is today. But what we're going to do is we're going to try to buy this on the earnings to see if we can't get a gap down, okay? Now, the one thing we kind of say is if you said, James, I don't want to do this, since the earnings is today, you can just kind of even set this up for tomorrow, okay? Now, how would you do that? Pretty simple. Confirm send. Now what we're going to do is we're going to come into this where it says edit. And actually, let me edit that order. on this buy, what we're going to do is we're going to say, look, send this order in, okay? And we're going to put it for tomorrow. Now, how do we get to this page? Click on the gear to the right-hand side. See the bottom right? Okay? And we're going to say submit at, and I'm going to put tomorrow morning, the 30th, and I'm going to say, like, say 9:30 my time, okay? So if at 9:30 tomorrow my time, send this order. So what we're trying to do is we're trying to get past the earnings reaction. And if at 9:30, we're going to send this order at 9:30 tomorrow, and if that stock is at 532 or less, we're going to try to set up this order. Trying to get it past the earnings. On this example, I know some of you are probably thinking about that. So you can designate to send these trades at a certain time or cancel at a certain time. Now, Mary Burns actually says 1 out of 10 is almost exactly what I see. Now, my point of saying 1 out of 10 is that you have some wins and some losses. But if 1 out of 10 could move the account 1%, and the investor maybe tried to do that on a monthly basis, well, 1%, if it did hit, hypothetically, if it did, that's 12%. Now, a lot of those trades were washes, but then there were some of those that were actually decent, okay? So kind of playing the numbers there. Now, what I'm going to do is go save, confirm, send, and now what I'm going to do is send the order. Now, remember, with the stop order, there's no guarantee. So the stop price, that's not saying it's going to sell it right out of that spot. It's saying it could sell at that price or less. Okay, now you guys remember the comment on the flag or fleeg? Well, now yesterday, Miss Barbara Armstrong stopped by the house yesterday.
Canadian fleets.
Probably turn off that volume. But what you're now going to notice is when Barbara was actually on chat and we were talking about Canadian, we were talking about the word fleeg, okay? She came by yesterday and thought it'd be funny to actually put a couple Canadian fleegs all over my yard. My neighbors, which 2 of them were cops, were wondering if I was moving to Canada, eh? And this is just kind of funny. But well done, Barbara Armstrong. So she had a little fun yesterday in the front yard. So just now, by the way, I love accents. Okay, I was born in Nebraska, lived in upstate New York, lived in Bowling Green, Kentucky, lived in 5 different places in Austria, lived up in Kiel, Germany as well, and then lived out in Salt Lake. I just love accents. Okay, so I definitely, not saying it disrespectfully, fleegs or flags. I just love accents. Okay, I love it. Now let's kind of talk about just real quick any questions that you have. Any questions that you have. Now, what I want to do, so the first trade example is Microsoft, trying to catch it on a little pullback here, okay? Now, if we were to take a look at this, I just want to see if there's any questions. We got Ben Watts in the chat, and thanks for that. Yeah, now, that's absolutely right. What about those Blue Jays? You're darn right, man. They've been tough. Okay, I think even the Dodgers have been surprised. Now, just real quick, any questions? I just want to see if there's anything. If I missed anything, or Ben did, let us know now. Okay. Yeah. Now I lived in upstate New York. We always go to Toronto. Always great time. Always great people. Okay. Now let's go down to just real quick. Let me send that order. Now the couple that I want to kind of take a quick peek at that I thought kind of were different. Now you guys and gals remember the example of IBM the other day when we talked about this. Let's go back to that first chart for just a sec. Remember IBM kind of had this unusual like gap down reaction post earnings. You guys remember that? And then it rallied up aggressively, okay? Now, this morning, when I was going through the due diligence of looking at the Dow 30, S&P 100, NASDAQ 100, I did tippy-toe into the S&P 500. I happened to notice a small company called GNRC. Now, GNRC has had so far a similar reaction. It gaps down on earnings, and then it's rallied so far. Now, what we're going to try to do, now, do we know that it's going to do exactly what IBM did? No. So this type of trade is, why are buyers buying on a gap down? With real money. This isn't paper money here, okay? Why did investors come in and buy on a gap down with real money? Now, one of the stocks that did that, GNRC, what we're going to do is we're going to try to buy some shares at the current price level. Now, some investors, they might say, James, what I'm going to try to do is I'm going to try to add to it if it goes up higher and maybe add to it if it goes up higher. So they're splitting up their position as it confirms more trend. They're showing it more money. This is almost like a relationship here, if you will. Okay. Now, what I'm going to do is I'm going to right click on this chart, right click. We're going to go to buy custom and we're going to go to with OCO bracket. Okay. Now, what were those numbers? Did they actually have earnings? Well, the estimate was 225 and the actual was 183. Now, this is kind of interesting. It fell quite a bit short. Okay. So 40 cents short. So this kind of emphasizes it even more. Why would they buy it when the actual was that far below the estimate? Okay. Now, what we're going to do is let's imagine we normally buy $7,500 worth of stock. In this case, we're only going to buy $2,500. And a lot of investors, they think sometimes that, oh, I got to buy all my shares at one time. No, you don't. Now, historically, people didn't like dollar cost averaging maybe as much because every time they got in, they got a commission. Well, we don't have an explicit commission. We could buy this stock, okay, for zero. The real commission, if you will, or cost, if you will, is in the bid-ask spread, okay? Now, if you take a look at that bid-ask spread and say, what's the liquidity like? That bid-ask spread is a penny wide. That's on PayPal. If I typed in GNRC, what's the bid-ask spread? Yeah, that bid-ask spread is in this case right now, if that's correct, it's in the spread. Now, this is that seems a little unusual. I want to double check that. That seems a little off to see something that wide. We'll double check. Yeah, it seems a little off. Yeah, that's a little unusual considering 3 million shares. Okay, that kind of tells us there might be some pending news on this of why the spread is like that. Okay, you don't normally see a stock intraday trading at a $1.72 spread. Now, remember, if you did a buy limit order, the price that it's actually filling at or trying to get filled at is at the mark in the middle between the bid and ask. Now, if I come back down to this, I'm going to type in even a price of, let's say, 188. Okay. I'm trying to go like in between the bid ask spread there. Okay. Now, what I'm going to do in this case is I'm going to come back down to, let's say, where this old high was. Now, we're just kind of wondering if they can kind of do like IBM did. That old high was about 203. Now, we don't know if it's going to go there. We're just going to kind of see, try to do what IBM did. And then as far as underneath us, we're going to take the midsection of this candle, which is about 179.92, and we're going to try to set a stop right under that. 179.92 less 2%. Now, 176.32. Now, on our examples, we're a little bit more lenient on giving the stock room to the downside. Why? Oh, we want there to be less chance to get stopped out. Now, if we see the stock go out to the upside, I'm going to put an alert right at the moving average. If we get at or higher than that, the other place we're going to put an alert is if we go at or above the 203. So what it's doing is it's alerting me. An alert is not an entry to get in. It's like a text. Ding, dong, right? It's saying, hey, if we go at or above those levels, someone's buying into that bad news. So this is the first of 3 potential position sizes. And we're going to put the first one on here, put the GTC, okay? GTC, okay, right there, confirm send. And there we go. Now, you got to ask yourself, Generac is in what sector? Okay, it's industrials. Now, if the industrials start to break out, if Caterpillar pulls that group up, even though the sales forecast of Generac might have been softer, Generac is actually part of the sector, okay, and it can pull it up. Now, we're going to go ahead and send the order. Remember how the stop order works. We're going to send that order. Now, I'll fix that. It looks like it ran out of money, but I could fix that, okay? Now, the other one I want to kind of pull up just real quick, a couple stocks I want to kind of show. We said this week earlier that we're going to keep an eye on Broadcom. Well, Broadcom. Now, why did we say that 2 days ago? Well, Broadcom was kind of one that was showing a moving average crossover. The moving averages were pinching. If we look at this in terms of a price pattern, your classic ascending triangle. Now, they're not hard to find. We went right back and said, hey, if I added, let's say, Abgo to this list, and I'll just use this as a list. Actually, you know what? Let's make a quick list right now by ourselves. How do you make a quick list? Let's do create watch list. And I'm going to call this a sample list. Let's put the date on it today so we know it's for today. Now, a couple stocks. I'm just going to kind of put some here, okay? I'm going to put a little Palantir. Okay, that's another one we said we're going to keep an eye on. We also want to keep an eye on CEG, Constellation. Okay, AMAT as well. Abgo, which we made mention of, we'll show this in just a sec. We said to also keep an eye on CrowdStrike. I'm going to also want to talk about WDC, STX, or STX, yeah, CMI, which is industrial again, GLW, which is industrial, NRG, okay? I'm also going to include Carrier as well, okay? Now, if we take a look at this, I want to see if I miss anything. Let's just kind of use these to start with. Now, if I click on this, what we're now going to see is these are some stocks that are really kind of showing some bullish patterns. Now, if they're bullish in general, now, if you can't see green, okay, this can be tough, okay? Now, remember, just because it's trend 3 right now does not mean that it's trend 3 tomorrow. Trend 3 just priced above both moving averages. Now, the one thing I want to kind of point out why I want to do this is if I pulled up the one we mentioned as Avgo, this is really showing us that the MA crossover happened 1 day ago. Now, remember, scripts are not guaranteed for accuracy or timing. So you want to be made aware of, like, what is it trying to do? And then you verify with your own eyes. Okay? So this crossover really on Avgo happened. The X means it crossed over, plus 1 means it crossed over a day ago. The crossover is 1 day old. Now, the other thing that's kind of interesting is whenever you get the whole moving average, the green background is telling us the shading of the moving average. The moving average is green. Well, the number in the box is counting the days that the moving average has been that color. Well, the moving average for the 10 period has been green for 3 days, and it's been green on the 20 period moving average for 3 days. What does this tell us? That this is fresh. Smell that? It's almost like going into a bakery here. Fresh bread. Now, we don't know if it's going to go up tomorrow, today, whatever, okay? It's just fresh. Now, the other one that's kind of a little fresh as well is actually CEG. CEG. Now, remember, this isn't hidden, okay? All this we lay out right on my X page. Don't say we didn't give it to you, okay? Just go out and take it, okay? Take it. Now, here's the thing. This one, CG, is turned green today. So if we're talking about I want some new setups, well, the newest setup in this list is really CEG because that just turned green on the 20-period moving average today. Now, what you're going to notice is a bullish trend tends to actually have bullish bounces, known as Caholts. If those bullish bounces do start to bounce up, they could actually lead to breakouts. And if those breakouts actually happen, then it's the timing of the breakout. Is it a today breakout? So you're going to see it's a transition, right? You get a moving average crossover. That moving average crossover leads to a trend. The trend actually might start to show relative strength. That trend actually might start to show or should show bounces. If we bounce anywhere, like up, then we turn to breakouts. And now we just get, are they today breakouts? Are they continuing from yesterday? And so on. And if those breakouts or trend patterns, do they start to go to bull flags or fleas? However you want to say it. I don't care what you say. It's just important that you recognize it. Now, if we went back and said just real quick on Avgo, does Avgo have earnings? The reason why I pulled up Avgo on Monday is it didn't have earnings. Okay, a lot of people say, I'm not going to invest stock because it has earnings. Now, here's the deal. On a stock like this, we might say, well, James, yeah, broke out. We're too late. We're too late. Well, here's the thing. If you said that, you haven't learned anything from me, okay? Let's set the record straight, okay? Here's the deal. If you make a higher high, The highest likelihood is to make a higher low. Highest likelihood does not mean 100%. But if you make a higher high, that's not bearish, number one. Number two, that's an uptrend. Uptrend is higher highs, higher lows. So if we make a higher high, it's not to say that it can't pull back and try to make a higher low. Now, I said that a part of investing is mentality. A lot of times when people see a brand new high, they think, oh, we meant it. You can't go up any higher. That's a mentality problem. That's not a stock market problem. That's a mentality problem between your ears, okay? And we have been so conditioned to be retail people. I want to buy cheap. I want to buy cheap. And then they wonder why they just have a whole bunch of cheap stuff and the garage is full of garbage, okay? Well, in the world of investing, we're not necessarily trying to buy cheap. There's a reason why it might be cheap. People don't think there's value. Well, one of the signs of potential value is that the price is maybe going up and other investors see it. And they're knocking the price up higher, thinking it might go higher. Now, what we're going to do is, in this case, is we're going to buy some shares here. Now, I'm going to do this quickly. We're going to right-click, buy custom with OCO bracket. Now, that last section, if you watch this on recording, you need to go back and rewatch this because I'm telling you, I know I had to overcome that. I was conditioned, oh yeah, look for something cheap, look for something cheap. And what really happens is you miss trends, not because the market doesn't give you opportunity, it's between your own ears, okay? So now, if we take a look at this, we want to go back to, I'm going to do even a half position. Half position would be about 37.50. Why the half? Well, some investors might say, James, if we pull back, if we get a red candle and then a brand new hold, I want to try to buy on a brand new bounce. So your homework assignment, I want you to practice position sizing, okay? I want you to look for those bounces. I want you to look for those breakouts, those continuation patterns. And I want you to practice buying A, on a breakout in a paid money account. And then two, I want you to practice buying on a new bounce setup. What is that really going to do? Well, it's going to help you kind of hone your timing in terms of buying in an upward trend, because what you'll recognize is bullish uptrends don't typically just have one entry. There should be multiple entry spots in an upward trend. And the question is, can you practice the skill of a breakout, a crossover, or a bounce? Can you stay focused on a stock, not 52 different stocks, a stock where you could say, this is where I got in the first time, this is where I got in the second time, this is where I got in the third time. So you're actually focusing, concentrating, and exercising discipline, which most people don't have, okay? And that's why everyone doesn't have the same results. So the biggest actually thing is I want you to practice on that. Focus, concentration, discipline. Take a small group of stocks like we actually just did here. And that list of stocks, what we're going to do is we're going to look and see, show me the breakouts, show me the crossovers, show me the bounces. And then we're going to just take a position size of a half of a normal position or maybe a third. And that's what I want us to do for homework, okay? Now, in this case, if we said 7,500 was the full position, if I did 37.50, you know what I'm doing. I'm doing half a position. And now what I'm going to do is we could actually put a target in closing here. I'm going to go back and kind of say, where might this try to go to? Now, Fibonacci for many technicians is probably one of the tools that many technicians like to use. It's one of our tools that we like to use. We're going to put a target right up here at about 422. Now, a lot of investors will say, yeah, that's too high. Well, hold on. That's only 10%. It's not like 100% higher. And then what we're going to do is underneath in closing here, if we said, hey, look, I'm going to set that stop underneath the shorter term moving average, namely the 10 period, that's going to be 358. Now, again, I say this on purpose. We do set wider stops. We want there to have a greater chance of that trend evolving than getting stopped out prematurely. I don't look at reward to risk on stock trading because it's more like fabrication. You can just put targets and stops wherever, okay? You would more look at the probabilities, but that's not this class, okay? If we take a look at that, we got 422 and we got 358 as far as the downside. Now I got to wrap it up here. but I want to I gave you a specific homework assignment. It's focus, concentration, discipline. I want you to take your position sizing and break it up into a half, 50-50, or a third. Practice looking for those breakouts, crossovers, bounces, and timing those entries, which there are a couple to practice in the paid money account. Okay. Also, if you have not, for example, put those column headings on your Market Watch page to try to make your life simpler, do it. Practice it. And also verify with what you're seeing on the chart as well. Stay tuned for our next webcast coming up right at the top of the hour. Thanks to Ben Watson for answering those questions in the chat, and thanks to all of you as well. Now, remember, with what we talked about here today, it was a little bit more on the growth side since that's where the trends were. Now, also remember with what we talked about is done for example, illustrative purposes only. Also remember to hit the thumbs up button, smash that, so that way other people can find it out there on the internet as well and join us here in this class. With that said, thanks so much and stay tuned for our next webcast coming up next. Take care. Bye-bye.